There's really no price action from the left to go off of. So it's more of a intraday approach to see how we're going to react to price. So it's more of a reaction thing. You wake up, you look at the charts at New York, and then you start to frame out how we're going to go about looking at price action. So we're going to let's start off on Monday. Okay, so Monday, let's go on to 1 hour. So if we're looking at Monday and we see this price action forming, right? What we can see is just sellers have been induced. We have a buildup here that has reacted to these lows. We react from the area and then we sell off, trapping these early buyers. So we've just showed an indication of us trapping early buyers and inducing sellers. Therefore, we do not want to be. This is a very complex situation because we are at all-time highs. So remember, this is just us dissecting what price did. Me personally, I wasn't necessarily trading NQ this past week until the start of the midweek towards the end of the week because that's when price actually showed decent price action. And these conditions, it's just hard to really frame out where you can position yourself in a low risk environment. So we have an inducement high now. Where is our inducement high? Our inducement high is this high because we've taken out this low. From here to here is where we induce sellers taking out this low here. So therefore, that's my inducement high. We take out that inducement high, and price takes it out around Asia. Nothing really has been of significance to me that it took it out in Asia, but what we can see is that that creates a liquidity block. So I saw this when I was analyzing NQ, like after the fact, but nothing I wanted to take just because it's a very risky spot to put yourself in to take these type of positions. So now that we create that LB, let's see what price does. So let's just make this look better. So ask ourselves, why did we induce buyers? Why did we take out this inducement high here, right? What caused price to push up to take out this high? So when I'm looking to the left, that shows me all the information that I need. So I just grab out this low here that price is respected. Price respected this low, and notice how once it respected this low, it started to induce buyers trickle up and ended up taking out this high. So now we say buyers are induced into the market. Therefore, we don't want to be taking any buys of the sort. So we get a reaction, we trade lower, inducing sellers, then we react from this area that buyers want to be buying from. We induce early buyers. So therefore, buyers want to be looking to buy from these areas. We do not. Buyers want to be looking for some sort of longs at these lows. We do not. So what I saw the other day when I was marking up NQ, just seeing what prices did, look at this. We get an early sell-off here, inducing sellers and trapping them. And that, what do you know, is a potential entry to take a short off of. Although it's high risk, just because of the conditions that we are in NQ, it still fits the system because we've induced and we've trapped sellers, and we also have liquidity in the market to target at these lows. So therefore, this was a potential sell that you could have taken. And this was Asia. Funny that I don't really take entries in Asia on indices. I've stated that. So therefore, you guys know I was not in this position, just to clarify that. But it's just it trains the eyes to see what when our model presents and when opportunities can be taken, essentially. So to the least at these lows to target, I would heavy partial at these lows to the left as well, since we've taken out that liquidity from the left as well. And I also seen this as well. So we've taken out this trap area after. this impulsive sell-off. We induce sellers here again, and then we react off of these lows. So notice how we're reacting off of these lows, causing a buildup. And that does the same thing as it does here, causes us to induce buyers. Notice how we induce sellers, trap them, inducing buyers. And what do we have above? A liquidity block. Funny that another entry in Asia that you could have potentially taken as well. Let's just mark that out to train our eyes to see, like, if this was prime conditions, our session, New York session, prime time, and we're seeing this price action, that's a low risk, high probability standpoint for me. So I'd be willing to take that. So we could partial out at these lows at the most. I'd want to target these lows here just because this is where we originally induced buyers from. So we can agree that although we've had this breaker structure here and all we did is trade up, pull back into these areas and induce buyers again, all that does is trading into structure, letting you know that buyers want to be buying this thing. We have a bullish market environment for retail to want to be buying at the lows. So therefore, we just target these lows. We want to see reactions at these lows. And what do you know? Price runs into these lows. Those are just two Asia entries I saw that I was very intrigued by because those could have been higher time frame entries in a sense on the 15 minute to where you just take and you hold and wait for the next session to play out. So those lows were taken now. So now we've induced sellers. So let's clear this out. We've taken out the low, inducing sellers, and then we end up trading lower. So we end up trading lower after this price action. Let's go over this because I was actually looking to take these shorts, but I hesitated just because I wasn't completely sure. So we've induced sellers here. Therefore, I do not want to be looking for sells or buys necessarily until I see some form of buildup. So this would have been a high risk play. Thankfully, I stayed out of it just because I wanted to stay true to my bias as far as taking a high probability position. So what do? We trade up here, taking out this high, and then we start to respect this area. Price comes back and respects this area after it induces buyers and then traps them. So we respect that area and we move away. So therefore, that lets me know that we build liquidity here. Let's just make this area look clean. Okay, so now that I know we built liquidity here, I want to see how we can frame out what can we do to potentially get into the market. So what I saw was this. I saw this area as an LB. So let's just mark that out. Taking a low, taking a high, liquidity block. So that's not enough context for me to essentially take the entry. I need to see more things in the market happen. So therefore, an aggressive entry is just not on the cards for me, especially in these conditions that we induce sellers. Remember, since we induce sellers, this is going to be a low probability standpoint of trying to look for a sell. But I would need to see buyers get induced to the market, a build up at the lows, and just a clear indication of a confirmation entry. So we take out this high, the last high before the liquidity block. I like to see sometimes when price takes out that last high before the liquidity block, it just gives me clarity on saying, okay, maybe price can reverse from this. So we take that out. And now that's when I would go to the lower time frames. Mm, we can go to the 3 minute. That LB looks way cleaner on the 3 minute than it does on the five. So now what we do is after we take out that high, we respect these areas. Notice how we respect this low, which is an inducement low. Why is it the inducement low? So if we frame out this price action here, notice how very subtly this is the last candle before we start to move up. So that causes us to induce buyers. So therefore, I want to see a build up here. The reason why I wanted to see a build up here and an indication of early buyers get induced, that lets me know that I can potentially take a confirmation entry here. So once we trade into this area and show that we induce buyers, that would be all I need to see to potentially take an entry. So price ends up taking out this internal high. Notice how that internal high, this area, took out these lows. So since it's taken out these lows, that becomes our inducement high. That's a lot of words. I don't like how it looks like that. So let's just mark it line. Okay. So we have a LB here. Me personally, I didn't take the entry. Just like I said, I hesitated. I didn't want to involve myself in these conditions, although it's set up pretty nicely. I'm still in a high risk condition. So even though it could have, made me money in a sense, I didn't want to put that risk on my accounts. So nevertheless, it just shows that disciplined trading just keeps you keeps you grounded. So we take out that high. So therefore, we take out the inducement high. That's a potential short that could have been taken high risk for me just because I feel like I still need a little bit more conviction just because these are high risk conditions. So let's just mark it out. And I would have been targeting these lows. So let's also go to this. So make this smaller. The potential entry that I would have taken though would have been this one. So we do the same thing by respecting the low that took out the high. So basically respect the inducement low. As soon as we get an indication of buyers getting induced by the high getting taken, I would have taken a sell. And just covering all the highs. Me personally, I would have seen that. I've seen in instances price can also re-induce and take out this high and then respect this area. So that's why I would leave breathing room and just cover this high. It's just conservative in my opinion. I'd rather not get taken out just of something so intricate like that. So most of the time, just cover the high. It's not even that much of a difference in pivot wise, but I like to be conservative. So as soon as that high gets taken, take the sell, cover the LB above, and then target those lows that we had to build up at. So those were just an example of some high risk shorts that we could have got into. So now we've taken those shorts. So now we trade lower. And what does that do? It induces sellers to the left. So let's go back. Hold on. Let's actually do this as well because it keeps making me go to yeah. Okay. So now we take out the lows from the left. Oh, let's go to the 15. It looks cleaner. So we take out these lows here. All right. Now let's clean this up because none of that matters now. So now we've induced sellers into the market. Now, I do not want to be looking for any sort of sells just because we've just trapped buyers. Notice how this is where buyers were originally getting induced from. So we had that BOS in the market, price builds liquidity here, right? Notice how we build there. Price taps in into that area basically. With this low, we tap into this area here. So therefore, this is where originally buyers are getting induced from. Another indication showing that we take out that high. So let's just clean that up. So we've induced sellers. Now, I do not want to be looking for sells. Sells are going to be low probability, high risk. Now, not justifying that we were able to take that high risk trade here. We've trapped all the buyers. again, I said that I stayed away from that price action just because of knowing that price could have easily respected the lows, ran to the highs. So let's get into this price action here. So what we do now is once we taken out the low, we have a high here that we want to see get respected, that we want to see a build up at. So that area that has potentially been respected previously, we can see price return to, because now this is a build up in the market for us. Now this is a build up for us. So we can see price return to this area. So if I go on the lower time frames, we could potentially see if we can find something because I saw a potential entry that day, but I stayed away from it. I felt like I needed more conviction just because of where NQ's at and any other asset and any other price range, I probably would have been more confident, but in NQ, I just wasn't that confident this week. But we take out the high. Notice how we take out that high right after taking out these lows. So that induces buyers. We do not want to be buying at that low. Wait for that low to get trapped. So we trap those lows, inducing sellers. Therefore, we can potentially see a reaction away, and we move away to take out the highs. So now what the price does, let's key in on that. Let's see. Let's see what price does. I'm pretty sure there was something in this price action. So we take out the low after inducing higher. And then what we do, we respect this area. So price respects this area. Boom. We react from that area. And what do you know? We induce buyers. So we take out this high. That high lets us know that, okay, we just induced buyers into the market reacting from this area. So if I'm looking at this from live price, I want to see, since we just induced buyers, I want to see them get trapped. Now I have to look where buyers are getting induced from. So where I would see is this whole area as a buildup. Look at all this price action of just wicks respecting each other. Mm. You can say here, price induces sellers here by taking out this low that took out the high. And then you can also refine that to where buyers were originally induced from, where price reacted from to cause this move up. So you drag out this line here, drag that out, and notice how we have an LB here. So we have an LB here. Me personally, I didn't take the entry. I was focused on other pairs, but would have been a pretty decent scalp entry to take. So cover the lows and then target this high as well as the high above. This high is a liquidity block, but remember, we've had that build up previously from those high risk sells. So we still have a framework of price to go higher. So partial here, manage the trade, or just BE in general. I would take heavy partials here just because that liquidity is taken. But remember, we still have liquidity to the upside in the form of this area here. So we could see potential reactions after price reacts from these areas, but just a false reaction to possibly buy back up. So you could target these highs as well, like leave a little bit on the trade. So once we take that out, we start to move up to the upside. Nothing really in this leg of price action. This is PM session, but what we can see is price does this. We just react from these areas. Just draw that out, react from that area, and then you see price induce sellers. So could have been the timing is off, honestly. This is around near market close, like 4 o'clock. So don't want to be involving ourselves around in this time period, but Once we see these false reactions and a good timing of price, we like to take advantage of that. See that reaction up after inducing buyers, trap them. We have liquidity to target now. So those are just prime example how to depict where you could potentially get a continuation entry in any other asset. So we start to trade up, the market opens again and takes out those highs. So that was a potential entry. So now let's go back into the higher time frames in a sense. Let's go back. So now what we do after we induce buyers and we've taken out these highs, we need to see buyers get trapped. But let's remember now, we are still bullish because we have taken out this liquidity from the left. All we've done here is taken out an inducement high. Yes, we can see a reversal, but we can see a reversal in the form of price pulling back to trap buyers and leave liquidity at the highs to target to have some sort of continuation going up. So remember, the framework is we've induced sellers, therefore our bias is still bullish. So now all I see is these lows have become an area that price is wanting to be inducing buyers from. So once you look at it, we can see price has respected this area, moved away, and taken out this high. So therefore, we can see price back at the lows, and that's exactly what happens. Price comes take out that low. So now there, this was a pretty tough price action for people to navigate. I seen in the Discord, but here's what we had. When I did my forecasts on this price action, let's actually clear this to make it look cleaner. Okay, let's clear that too. I like to have my charts clean. So we've taken out that high, inducing buyers, yes. So since we've taken out that high, I do not want to look for sells just because it's going to be counter bias. Like I've stated before, we've taken out the low from the left. Therefore, I don't really need to look for sells. There's no liquidity at the lows for us to really target besides the inducement low. But still, price could easily respect that inducement low and then trade away. So we could see price to these lows here. And if you go on the 1 hour, it's a little clear here. So that takes out that high. That lets you know that this is your inducement low. And I've also marked out this low here as well. Because of this, you can see how that candle just respects that low. So that's why I marked out that low in live price. And as well, on the 4 hour, it looks clear as day that this low is your inducement high because it takes out that high there. So that would have been a just a attention to detail moment that can save you from trying to take longs before that area is taken. So let's just go back and just refine it there. So it looks clean on the 15 too, just in the form of this, but just to train your eyes to see like when you're doing a multi-time frame analysis, how you can also find a way to save yourself from that. So we've induced buyers. We do not want to be taking any sort of longs above this area. So just wait for price to build up because that's all the price is doing right now. Price is reacting to these lows and inducing early traders to get into the market. So we react from this area, creating a buildup. Price respects this internal area, and then it ends up running for the low, right? So we end up running lower, taking out this internal low, but still that doesn't give me any conviction to look for longs or anything. The shorts now, the high risk shorts looked very nice, but I stayed away from it just because it's FOMC. I don't want to involve myself in those conditions as well as a high risk trade. It doesn't sit right with me. That's just gambling at that point because if I am not confident in that position and I know that it will lose, but I just want to take it just because it could make me money, that it's not the right framework of thinking to you know, be trading with. That's just a gambling mindset. So we have a LB here, yes. So we know that we have an LB there. And then we have an inducement high here. So since we have that, once this area is taken, we see price take out the inducement high, react from the liquidity block. Normal conditions, and especially in an environment where we did not induce sellers at these lows, and we see a price action like this is quality entry to take. But since we've taken out that lows from the left, we have no engineered liquidity besides this low here. It's not a valid entry that I would not necessarily a valid entry, I'm sorry, but a high risk entry for me to take. Therefore, I wouldn't be taking that. So let's go into it. I've seen people in the community take this entry. Not wrong. Just a little bit lower probability in my opinion, just because of what we have to the we're bullish essentially. So we've taken out the inducement high. Now we've respected this low. So we've respected the low and we've traded up. So notice how once we respect the low first and then we trade up is what I like to see usually. So that would have been a confirmation entry that I potentially would have involved myself in if I seen it and also it wasn't FOMC, right? So we've had all those conditions met of we've respected the area and then we've taken the inducement high. So it doesn't look like there's really this whole area is essentially ALB. But I wouldn't have been confident in the trade if I was looking at the 1 minute, honestly. So if we go on the five again, that would have been a trade that I probably would have taken on the five, but still, I don't really like it. So that would have been a potential entry though. Still, again, high risk, but I would take that entry into at least these lows here. Why these lows? Because this is where buyers were originally getting induced from. So we can agree, boom, boom, we induced this high there. So I would have at least taken all my profits there. And this is in this sense taking all my profits just because in these high risk scenarios, it's very, very important to be more aggressive with your management on the trades. So break even there, take the whole trade off there, in my opinion, at least. So we've now taken these lows and we can refine it because we've taken these lows here. Hold on 1 second. Oops. We've ended up taking out these lows to the left. Now, these are not conditions I would want to be buying from. Yes, it's taken out the low from the left, but we still have liquidity that has not been taken out from the left yet. So, not an area I would want to be longing from once this internal gets taken. But what we have done is we now have built liquidity on both sides. Since we've taken out this low, we can potentially see a reaction back up to these highs just because we've induced sellers. So therefore, any sells that you're in should have been managed properly since this low's been taken and we've induced all this internal. So just not clean price action for me to involve myself in. 1 o'clock, all we've done is induce trap. Like you get the clean lower time frame price action, but all of this just negates that. The fact that we're still in this range, this buy trap of reacting from this area to the left, it just does not give me conviction to take any of these trades. So this is how you stay out of the market. We induce trap, respect this area, and we move away. We ended up taking out all this liquidity here. Funny that we take out that liquidity, price trades up a little higher and takes out the area that price was reacting off of as well. So this was a liquidity block area, yes, but not an area that we want to be trading from, but an area that we want to see reactions from though. We can see reactions from at these liquidity block areas to essentially do this. This meaning generate liquidity in the market. So, oops. So let's just draw a box, draw the whole box there. To just indicate that we've reacted off of that area and induced traders to get into the market, induced sellers, and built liquidity once the sellers got induced. That area gets taken out first with what was this, FOMC? This was like way after FOMC, which is weird. These FOMCs have been like very trash lately in the form of volume, in my opinion. But it is what it is. So we take the high, trapping all these sellers. So we trap the sellers, and then we run for the liquidity and trapping the buyers, all the buyers here. So notice how that FOMC price action was there just to build liquidity in this range in a sense. But essentially, it wanted to seek and destroy liquidity on both sides, and that's what it did. The high first, the low first, and then now price is going to move in the intended direction. So what we do here is price just, what is this? Let's see what this is. Mm, this is like market open. There's no way to catch an entry there. So price just runs for all-time highs after that. Insane. And Q's been on smoke with that. So we run for all-time highs. Now let's look at the price action that we've been blessed with in a sense. This disgusting price action. So let's go to the 15 to really go over this. So we've induced buyers now, taking out all-time highs. This is uncharted territory now. So whenever we get in these scenarios, we do recommend staying away. But just to analyze and see what price has done, we can get into this. So we've taken out the high, but these are not areas I want to be buying from in a sense. So what we do is we respect this area here. We respect this area here. Therefore, I want to see some sort of buildup. So we respect that area and we induce buyers. So look at how we induce buyers by taking out that high, that internal high. So buyers can induce. I don't want to be buying from this low. Retail wants to be buying from this low. Why? Because essentially in retail concepts, SMC concepts, whenever a high gets taken, wait for the pullback and buy at the lows to continue it up. But not our framework of thinking. We want to see some sort of build-up reaction, but price ends up trapping those buyers. So we ended up taking out those buyers, but look at how we did not take out this liquidity from the left here. Same thing like in this price action. We took out the low, but we didn't take out the liquidity from the left as well. So kind of a scenario that you don't really want to involve yourself in. So one for sure, I would never take this direct entry long just because we've still left liquidity here by, we respected this area, moved away, and we still haven't yet to take out this low. So no direct entry once this low is taken. What we do is once we take out that low, we indicate that we induce sellers and letting us know that we have liquidity here now. So since we've taken out that low, the next form of liquidity, I currently see we have liquidity on both sides, but that just indicated that we have liquidity at the highs as well. So let's get into this price action because there was a high risk continuation long in this that I saw, but again, I stayed away just because of the conditions that NQ in was just not viable for me. So we take out this build up here. We take out that build up here, just ran through it. And let's go over this because this is pretty clean. Let's actually go to the 3. Okay, so notice how once we've taken out this high as well, we've taken out this high with this build up here. Price reacted from these areas, build up, and then we've trapped those buyers, essentially that taken out the high. So buyers get trapped, sellers get induced. We form an LB doing that, by the way. Form an LB. Now we want to see some sort of build up. We get that. We react from this area. Notice how we react from that area. We come lower and then we induce buyers. That's what you want to see. And we induce buyers by doing what? Taking out the high that pulled back essentially. And another thing is we've also stayed below this inducement high, which is paramount for me. So this gives me the conviction in wanting to take this long. Wait for this low to be taken and then take your entry. 1 second, guys. All right, just had to answer phone. So partial at these highs here that we induce sellers from. And again, you can also target all-time highs because remember, we do have engineered liquidity there. So that would have been a great trade to take, in my opinion, just because of this price action here. This price action gives you conviction. We taken out the high and do sellers reacted from that area. This here alone, the fact that we did not take out this high lets me know I want to get in that trade. So we take out those highs, inducing buyers. So now we're again in uncharted territory. So what price does? Let's make this look cleaner. So Friday, this was? Yeah, Friday. Because Thursday, this is just not price action you want to be trading. We take out these lows that induced buyers by taking out the all-time highs, essentially. Ones. Okay, so we've taken out the lows, inducing sellers, but we don't see any form of engineered liquidity in the market. So how would we approach this? So this is when you have to really start looking at the lower time frames, in a sense, to really build your buys. So I looked at this price action, but there was no real entry to come about in in times that were after stock exchange. So it would have not been valid for me to take anything. So we react from this area here, react from that area, and we don't really do anything. We just respect the low and then move away. So notice how though, before we take out this high, we made perfect equals there. And what we do is we take out this low. We take out that low. And I noticed that this area formed an LB by taking out this high, taking out this low. But look at the time. It's 8:10. I'm not taking that entry. So I I deem most of my entries in indices pre-market a little bit high risk just because stock exchange can open and then we can have a huge spike in either way. So just not ideal for me to take that. But it's there. LB traders get trapped while respecting this area as well. So this was not past 9:30. I'd definitely take that entry, but it wasn't. And then we just do the same thing by we have a build up here, made perfect equals. And notice how we induce higher, respecting that area, taking out this low here, and this area was LB, but still, again, we're still not in timing that I would potentially take the trade in. So therefore, not an entry I would take. Even in here, we're still not in prime time. And we ended up taking out the highs at 9:30. Nothing clean. Price just runs for all-time highs. So that was NQ's price action. Before we go on to gold, let's see what we have as far as questions. Okay. Yeah, doing gold right now. Can we say once the inducement low or high is taking price will go opposite direction? Price will tend to reverse after an inducement higher low is taken sometimes, or price can just blow through it and run in an intended direction. So same thing with a trap area. Price can easily respect it and move away from it or just blow through it. So I'm having some difficulty identifying market bias consistently. Could you please guide me on how to determine bias more clearly before entering a trade? So if you look at the content that we've provided for in the Lifetime community, we have many, many indications of how to identify market bias. A lot of Avid's webinars, my webinars, Adams, we've gone over this time and time again. Is your safe condition to trade will be during all hours of stock market open? Yes. I don't really necessarily look at PM. I like to be off the computer around 11:30, but as I would deem my trading hours as far as indices or futures, whatever you want to call it, but index futures after stock open. Can you show me examples of inducement high where you roll over stop loss? Oh, we're not going to do that today because we have a lot of examples of that in the course. So let's get on with gold. So one thing I noticed about gold is I like to just pay attention to the futures chart, even if I'm trading gold on CFDs, just because there was times where I used to notice where there would be discrepancies where the low or the high wasn't taken on XAU USD, but it was on the futures chart and price reacted accordingly to the futures chart. So that's just another example of me why I pay attention to the gold futures chart more than XAU. So what we have here is we started the week off. We started the week off in these areas before these lows were taken. So we knew we had liquidity at these lows because we just can see clear as day where buyers are originally being induced from. And we've just been reacting at these lows, just reacting, building liquidity. So having that trend line like price action. I seen an entry that I've taken on Monday. It was a CFD entry just on a Darwin X account. Nothing major. So let's go over that. Kind of hard entry to spot, risky in my opinion, but valid nonetheless. So where's Monday? Because that was Monday. So what we do is we ended up taking out this low. We ended up taking out this low. Boom. But we still, yeah, we ended up taking out the low from the left as well. But we still stay below here. So we take that out. And what we do is we respect these lows. And notice how we also induced buyers. So let's go to the 5. I think it's clear on the 5. So we induced buyers here, taking out these highs. So we've taken out these highs and we reacted from this area here. Not an area I would essentially take a direct entry off of, but we can see something as far as on the way down. We don't get that. We just see price trickle on the way down. So price induces sellers after reacting from this area. All this does here is induce buyers into the market. So a lot of traders could have seen this as, oh, we've taken out these lows here. I want to buy. I want to take a buy. Seeing this as a LB, but we've essentially induced buyers here, respecting this. Price respects this area here. And we're still in that higher time frame framework as well of all that liquidity at the low. So therefore, shouldn't have been no reason to been longing from that price action because we still have these lows intact. So let's go back. We've taken out that area and we've sold off. So we ended up taking out the lows. We ended up taking out those lows. And come Tuesday is where we get price action that I did take the trade on. So we react from this area. Notice how we react from this area, this inducement high. We pause, and then we take out these lows, inducing sellers. So just created a buildup at this high. So we want to see price above this high. We see price above this high. Before we do that, we see a small little buildup here, respecting this area. Price respects this area here and induces buyers. So could refine that to this to just show that this is essentially all the liquidity that's been taken. So boom, all that liquidity has been taken, and look at what we have here. LB. Let's go to the 5 because it's a little cleaner. Yeah, there we go. So taking out all that liquidity, LB above, price reaction from that area. So we take out that high. So we induce buyers now. And now let's also remember we have lows still to the left and these lows here. So more lows that we want to target. So just really honestly, the inducement from the left. So draw that out. And then let's just fix that line. Let's just fix that one. Okay, so we're still respecting that area. So here's where we could potentially see a sell-off now. So if we go back over there, let's just go over that price action here. So this entry was around like Asia London time. So we take out the high. Now we run aggressively towards the lows. But look at how we have this build up here before we take out the low. So we have that build up and then we take out the low, inducing sellers. We take out these lows. But still, remember, we're framing out the higher time frame direction that we just mapped out. We do not want to be looking for any sort of buys just because we've taken out this low. So we want to see price respect this area. And look at this. Notice how price traded higher, respected this area, moved away. So want to see some sort of reaction, respect in this area, causing price to have false bullish reactions to essentially build liquidity at these lows. So what we do is we react from the low and we trade higher. What I want to see is price above here. Notice how we pause, we respect the low to the left, we go higher, respect, and then we finally take out the high. As soon as you take out the high, there's a short opportunity. Short opportunity, SL above the high. You can partial here. Me personally, if I'm trading CFDs, I just want the low. You can partial along the way and manage, but I wanted the higher time frame low, and you get a 1 to 10 out of that. There was also a confirmation because this was 1 o'clock, so Frankfurt, you get an entry here. So we respect the inducement low. So if you miss this direct entry, you get a confirmation. You respect this low, and we take out the high here. So we take out that internal high. So as soon as that internal high gets taken, entry above the new LB that was created since we take out this high. So now take that to the lows. I saw this price action, nothing really in it for me. I think some people took in a trade in this, but not an entry I would have taken. I see the logic in it because you have an LB here. We take out the low, but we're still respecting this area essentially. So wait for that to be taken. And I see why some people have taken this entry. But the timing, I'm just not up at the market at this time, so I wouldn't have taken it. Then we finally take out the low. So once we take out that low, we trap buyers. We trap all those buyers and induce sellers. So let's mark that out. Sellers induced. So now let's just clean this up because we're no longer in that bias anymore. So here's what price does. Not any sort of price action I would have involved myself in, but we do is we create a buildup by respecting this area. What I would have wanted to see is price trade below these lows while respecting this area. That would have given me some sort of framework to go long from, not directly from the low as it was taken, but if we taken the low and then we've seen some sort of price action build, I would look for some sort of confirmation entry, but we didn't get that. So we respect the low here. Therefore, potentially an area price could revisit, maybe, who knows? So we respect that area, move away, and we ended up taking out all these highs. So we've induced buyers. Me personally, I didn't look for any sort of shorts just because we've taken out this low from the left. I don't really see any engineered liquidity in the market besides this, but I was honestly paying attention to YM this day, so I missed this. I think Adam took a trade in here somewhere. So if you look at it, we have this inducement low after price swung up to the upside. So price reacted from this low. Notice how it does this. Induce sellers, and it comes for the high and traps them. Me personally, I would have missed this entry because once I saw it take out this, I would have assumed it would come for here. So I would have missed the entry. But if I was to take it, I would honestly have my internal point here. I just would not have known that it would have, personally, I would not have known that it would have come here. So I would have taken it from here, just covering the high, and then targeting that low. Risky trade, in my opinion, just because the higher time frame framework that we worked with, but the fact that we did induce buyers, you could take some sort of short entry, scalp entry, but you have to aggressively manage it. So that would have been a pretty decent trade to take. Induce trap, and then what is it? LB, LB there. So you're taking out that low. Now price starts to react from this area. Notice how price reacts here. Oh, it actually takes it out. So that's funny. So on CFDs, it respected this area. So that's why I like to look at the futures chart because it could confuse you sometimes. So it takes out that internal high, and this is a LB, so it potentially respects it, moves away. So it reacts to that LB, and look what price does. Has a sell-off. So price taking out this low. So since it taken out that internal point, it creates a new LB. So we induce lower, trap. This is a more valid entry, not more valid, I'm sorry, a more probable entry to take, but the timing is just off for me. It looks like gold has been having a lot of clean price action during Asia, but I have not been a part of that. So we take out the high, respecting this LB now. Didn't take this entry, but what we do is we respect this low. Not a low I would want to be trading from. Just because we took out this low from the left, we still have to remember that we've reacted from this low, which caused us to induce buyers. So not an area I'd want to be trading from. This would have been a more probable sell for me to take once this internal point is taken. So now that solidifies that we've induced early buyers after reacting from this trap area. And we have liquidity at the lows. So that would have been a decent sell to take. Cover that high. Let's target that low. So now Let's get into Friday. So Friday's price action. This is funny too because CFDs or XAU, the XAU chart, Oanda, respected this low, but the futures chart taken out this low. So you could have been very confused if you were looking at the XAU chart and seen price respect this area and then just shot up, giving you really no context on why price did what it did. So the futures chart, we see price take out this low. But me personally, I would have wanted price to come below here. Still have that framework of price coming below here, but we need to see liquidity engineered in the market. So potentially what price did is react from this area to maybe build liquidity for the future, what I'm justifying it as, and then price moves away. No real entry in this area for me. Price just shows impulsive volume, so ends up taking out all this liquidity that was left because we essentially induced sellers here. Yes, we induced sellers, but there was still liquidity at the lows. So therefore, I didn't involve myself in this price action. But that's gold. Let's see what questions you guys have. Um, oh, you guys wanted me to close the stock panel. My bad. Trade copier for CFDs. I think people use Traders Connect for CFDs for Forex. I mean, you took all the buy trades and got stopped out all this week. On what position? I mean, not what position. On what asset did you take buy trades and get stopped out? Got to dip out early today. Thanks for sure, Luca. For sure. I've never seen Trade Syncer for CFDs, guys. So Traders Connect. Yes, exactly. Traders Connect. Okay. Can you go over your USD trade that you took long? I actually didn't take this long. It was a long that I missed just because I got to the charts a little late, but just marked it out for you guys and just a valid opportunity. But Danny, if you can just type it out for me. Okay. So we ended up taking out this low, and this low ended up being the weekly low. I low-key wanted price to go below these lows here just because I saw it as liquidity from the left. But I tend to see FX likes to respect the extremes more often than not than futures does. So let's map this out. So we take out the low. And if you look at the weekly, that's the weekly low here. And it just gives me a framework that price can potentially still go bullish just because of we induce sellers. Why did we induce sellers? Potentially off of this reaction here of this price action. So just lets me know that price could potentially still go bullish. So taking out that low, let's go back. So now what we do is we had to build up at this area. We trade up and we had to build up at this area. Not an area that we want to be looking for shorts from. Look at this. Prices respect to this area moves away. So we have liquidity above this high, and we ended up respecting this high. Notice how we respect it. And we ended up moving away. And it's clear that we see this happen. So what we do here is we create a liquidity block by taking out this high. We take out that high, inducing buyers and trapping them. So once we do that, we create a LB. Form that LB. So since we form that LB, now what we do is we create an inducement low. We pause here, respecting that area, trade lower, and then we take out the high. So that gives us our inducement low. And we also respect this area here and we sell off. So we induce sellers here while respecting liquidity. So since we respected this area, that gives us conviction to look for longs now, since we essentially respected liquidity and we induced sellers into the market. Those false reactions gives us the framework to look for a long. So you just take the direct entry as soon as the low's taken, stop below the low, and then we target this high. You can target this high, and then there was also another target to take the entry to these highs as well, because we had a build up at these highs. Had a build up at these highs. Okay. So yeah, partial there, full target there. Pretty decent trade on Euro. I wasn't a part of it just because I wasn't looking at Euro on Thursday, and there was another potential entry on Friday. I think Adam took this trade. So what we do is induce, trap. Look how we get the reaction, inducing early buyers before we trap them. So gives you conviction there that we can see price moving up after that. So created an LB there, and we do almost the same thing. But this in this standpoint, we take out the high.